Good afternoon, George Cavaligos for DragonSlayer. Well, we got him today, didn't we, guys? Had a nice target this morning looking for a retest of the highs, and we retested the highs. It was interesting, the first time up we got to 01, then we had a little bit of a pullback where we get back down to like 29, 26, I can't remember exactly what the dip was, might have been 24. And then we went back and we made a one tick higher high, which just so happened to match the old 130.02 high from last Friday. And then the market started coming off. We tried to put a short on at that point. At least we said to put a short on at that point. The market started coming off. We got in close to the FOMC minutes, and I covered a third of my short. I had a stop at 130 even, which would have locked in a tick profit if I would have been filled on that. The FOMC obliged, didn't say anything about QE. They're not going to say anything about doing QE. They're going to keep that, slippery little card up their sneaky thieves' sleeves and wait until something bad happens so they can pull it out. You know what they're going to talk about over the next month is whether they're going to extend Operation Twist. They're not going to talk about doing more QE. They're going to talk about like doing more Operation Twist, which is supposed to expire at the end of June, like it's nothing. They talked about sterilizing Operation Twist activities. Fed's bought, I think, something like 60% of all government debt issuance in the last year. It's a freaking Ponzi scheme. And at some point, Ponzi schemes end. I think the market is anticipating the end of Operation Twist and possibly the end of QE3. Remember the chart we sent out, I don't know, maybe a month ago? I overlaid the S&P with the bond market. And if you look back, about a year ago, last spring, when the S&P was around these similar, levels, the bonds were trading with a 120 handle. And if it wasn't for the Fed's activities, I think that we would be trading bonds with a 120 handle, and notes would be trading probably 119. Let's see. Covered a little bit on the sell-off of the FOMC meeting against that old 128, 129.18 support level. Market kept breaking. Still have a third of our short on, and I'm going to look for the Asian hour sell-off tonight. That 128.19 plus to 128.20 is your next big support level. It's a fib retracement and it's a previous low. And I think we're going to see that level tonight, and I'm going to cover my last short, and we'll see what happens at that point. We could get a bounce. We do have, the ADP data tomorrow. We got, the Easter holidays impinging on the markets here. I'd like to keep a runner on at some point, but we gotta take these trades as they come, I think, initially. 128.19, I'm sorry, 128.19.20, it's double support level. I'm going to cover against there, even though I think we're going to go look at those old lows. I think we're going to see a retest of that 127.23 low that we put up, 2 weeks ago. That's my longer term plan. Short term, let's see what happens tonight. I think we should get a bit of a sell-off. I'm a little bit nervous about what happened Sunday night, where the market went down, made a slightly lower low, and then came roaring all the way back and made, a double top. I don't think the same thing's going to happen this time, but it's something that you need to be worried about longer term. Pull your stop down. You should have some kind of a profit locked in no matter what happens here. I think I want to put my stop down to like 129.24. I don't think we're going to get back above 129.21. That was kind of an early low from last night that I don't think we'll get back above. So I think I'll keep my stop pretty loose, let this thing run, and if I see 128.19 plus 128.20 tonight, I'll try to cover that last little short that I have on. It's Fed stuff, get out of the way, get out of the markets. Let these things stand on their own. It's the only way. It's like when you're raising your kids. If you give them everything and you coddle them and you do all kinds of goofy stuff, then don't let them learn how to stand on their own 2 feet. They're not going to be successful adults. And if you don't let the market stand on their own 2 feet, at some point, 4 years after the crash in '08 now? It's been 4 years of easy money policies. If the market can't stand on its own at this point, we got bigger problems than even I think. So there's my rant. We'll see you tonight. Go check out Fari is having a market timing webinar tonight. Fari's going to be talking about the stock market, and I'll be able to sneak in some comments about the bonds off and on. So I sent the link out. Take a look at it. Be an hour. I think it'll be up on his website under the educational materials after a day or two. He doesn't like posting these immediately. If you don't want to sit through the whole thing, you can wait a day or two, but that's fine. You guys got what I got to say anyway right on here and on the email. So have a great night. We'll see you later.